Happy Monday, everybody. I hope you had a great weekend. Today is April 17, 2023, and this is your Monday Market Update. Let's recap this past week's market action, preview the coming week, and add a few notes along the way. Last week, Monday, opened a bit lower as trading started. The Dow came off the long weekend in the Friday jobs report and opened down about 100 points. The S&P and NASDAQ were also opened down about 0.75% for the S&P and 1% for the NASDAQ. Coming off the Easter holiday, market history said that we're in for a good week. We'll see what happens. By the end of the day, the market had pulled off from their lows, and though the NASDAQ was still in the red, down slightly, the Dow was up slightly, as was the S&P. Tech stocks took it hard. Apple down 1.5%, Alphabet down almost 2%, and Tesla also down slightly. There was not so much news, a bit about the World Bank revising global growth forecasts up a bit, but no real conviction in the moves. There was some additional news about overall consumer credit. A survey from the New York Fed economists. I'm not really sure who these guys are, but it was an interesting survey. It found that the perceived probability of missing a minimum debt payment has gone from 0.3% to a disturbing 10.9%. Now that, coupled with the updated credit card balances going from $14.8 billion to $19 billion in a month, this is something that we should be aware of and honestly a bit concerned about. By the end of the day, the Dow was up less than 1/3%, S&P pretty much flat, slightly green, and the NASDAQ was flat, slightly red. Normally I'd say the quote, full of sound and fury signifying nothing, but I'm not sure that Monday would even have been considered sound or fury. Stocks opened unchanged on Tuesday as the international eco data was favorable. That's eco speak for good for the markets, at least this day. Inflation was down, small business optimism not as bad as feared. Fed head Williams did turn heads right around the open at an NYU speech stating that the banking stress, a new term instead of crisis, since it did not seem to be that of a crisis, but his comment was that this was unique and does not reflect the overall financial system. Eco speak for not expected to see contagion. Treasury Secretary Yellen did get in on it with optimistic tone. And the new Fed head, Goolsbee, his thoughts that the Fed needs to be cautious. Stock moved to new session highs in the early afternoon. The FT ran a late article that indicated the same. Goolsbee, as well as Williams, maybe a bit more dovish than expected. So stocks came up for sale a bit. Positioning did kept everything tame. CPI on tap for Wednesday. Dow was up about 1/3%, S&P flat, really the NASDAQ down just under 0.5%. Things got more exciting on Wednesday as the CPI number hit before the open and was cooler than expected. Stocks started higher on the open, then rolled over. First, the headline looked cooler. Then, looking at the core, it met expectations, but still higher than the Fed can handle. Fed minutes came out without much news, so the markets bled lower into the day and finished just ahead of some technical support of about 4,100 on the S&P. Not a bloodbath, but not too positive either. The Dow was down slightly, less than 1/4%. The S&P was down just under 0.5%, and the NASDAQ was down just under 1%. A bunch of news all together lit a fire under stocks on Thursday, and the market gapped up on the news that jobless claims were up more than expected. Check the box for the Fed's getting tighter labor markets. Cooler PPI data. Check the Fed box for lower inflation. And stocks in the U.S. were strong at the open and remained that way most of the day. Eco data from overseas as well, the Atlanta Fed chatter was a bit hawkish, but that was not to get in the way of the positive vibe of the market. Overall, Goldilocks was the talk again. Not too hot, not too cold. The CPI and PPI were not too hot, and the growth was not too cold. Add in higher jobless claims, and the market was near 2-month highs. The market really dissected the data as if they were right. And if they are right, disinflation is restarted, and that is a positive. But remember, I will bring you back, and not to spoil it too much, but this will be about valuations. We'll have to see how things go. The Dow finished the day up almost 1.25%, S&P was up 1.33%, and the NASDAQ was up almost 2%. An opening rally on Friday came on the back of stronger than expected big bank earnings. As I've been telling you, big numbers on new deposits in the bigs. The smaller banks' earnings may be pinched as they have to compete for deposits with higher rates, lower margins. Big banks just open the doors and people are throwing money in at 0.1%. Great margins. JP Morgan brought in nearly $50 billion, Citi about $30 billion. Watch for pressure on them to pay something on that money. We'll see if that comes. Retail sales piled on, negative, but not as bad as feared. Cold water came in the form of the University of Michigan data, increase in the one-year inflation expectations, and even Fed heads Waller and Bostic with comments about impending rate hikes. Stocks did rebound off the lows, but closed down on the day, up on the week. For the day, the Dow was down just under 0.5%, the S&P down about 1/4%, and the NASDAQ was down about 1/3%. For the week, the Dow was the big winner, up about 1.25%, S&P S&P up 0.75%, and the NASDAQ up 1/3%. Let's take a look at the coming week and see what it'll bring. As far as this past week goes, this one will be tame from the eco data news side, but we never know what will be coming. We do know that earnings will be in full swing. About 20% of the S&P companies will be reporting this week. As I've mentioned before, I think that there will be some shift in focus from the eco to earnings and valuations. We'll hear from some of the world's largest companies, J&J, Bank of America, Netflix, Lockheed Martin, Tesla, Morgan Stanley, Amex, and Procter & Gamble, just to name a few of those. On the eco side, we'll get some housing data and some manufacturing data. The price components of those reports will be watched to see if disinflation is back on. Beige Book 2, and of course we'll get the jobless numbers on Thursday, but that's the main labor number we'll get. That's the main number labor number we'll get this week, and we do know that, as the press says, this is what the Fed is focused on. Again, I think the focus is shifting for the market, that is. We will hear from a gaggle of Fed heads: Bowman on Tuesday, Goolsbee and Williams on Wednesday, Waller, Mester, Logan, and Bostic will compete for headlines on Thursday, and Cook will wrap up of the week on Friday. We will get some Eurozone, Japan, and Chinese eco data as well. This will play a big part in the dollar and the oil prices. What does global growth look like, and what does global inflation look like? As we move past the next few days, we'll hit the real 2023 tax filing day. That is, of course, tomorrow, and that will certainly bring out more about tax efficiency. It's something I'm talking a lot about on my Friday videos, so please tune into those. As always, please stay in touch. Let me know if you have questions. The planning is an important part. This is the fuel, what we're talking about on Mondays, but the planning is the engine and the true propulsion. Remember, this is all about reaching your goals. Please tune in on Friday videos, and I talk about that there, and of course, when we meet and when we talk. So have a great week, and we'll see you then.